Well, strong Q2 earnings. Yes, the question is whether they are sustainable for Prestige simply because this quarter, the operational performance with pre-sales being up 80% quarter on quarter and nearly 140% YOY. I don't think Mr. Irfan Razack could have asked for more. It was the best ever quarterly performance driven by healthy launches, I presume. And the company, to my mind, seems to be on track to beat the 20,000 crores pre-sales guidance for FY24. Mr. Razack joins in to talk about the numbers and the outlook ahead. Mr. Razack, good having you, and you must be a happy man with what your company's managed to achieve in quarter two, albeit the first half of the current fiscal.
Good morning, Niraj. Yes, we have to be happy, but of course the teams have worked hard. They've pushed themselves. They've created great products, and that's the effect, and you see it in the results. And I think we are working towards doing better and better as we go along.
Most certainly. Tell us what went behind these numbers, though, because to my understanding, when we did a preliminary understanding, it seemed to be driven by new launches.
Yes, obviously you need to have new product to sell. And this quarter, the Q2 actually was driven by a large launch we did in Bangalore, which was the Prestige Park Grove. And that gave us a big traction, gave us huge numbers. And that actually contributed almost 4,000 crores out of the 7,000. So see, when we do scale, scale does matter, and that's the result of the scale that we have. And I think that's what has fructified into getting these numbers. And similarly, we are doing many large developments like this across the country, and you'll see the results as we go along. And I believe that that's another flavor that customers also are looking for, that they want some big spaces, open spaces, and that also helps the cause.
Suffice to say that the pre-sales guidance that you had laid out is now easily beatable. Are you upping it? Sorry if I've missed the numbers.
No, actually the pre-sales guidance that we did give in the beginning of the year was around 16 to 17,000. After doing what we did in Q2, and also Q1 also was very nice. So I believed with the pipeline that we have, that the team can achieve and reach the 20K mark. And I believe that we should reach that. Of course, it's not easy. We can't take the eye off the ball, and we have to make sure that we work really hard and see that the launches keep coming and the new offerings to the customers as we go along in the next 2 quarters. And that will help us reach the goal of 20K. If that happens, that's one goal that we breach. And from there on, we'll have to assess our situation and see how we can get along. It's like Glenn Maxwell's 200 yesterday against Afghanistan.
Yeah, what an exceptional innings that was, most certainly. Just wondering, are you being a bit cautious and about these numbers, Mr. Razack? Because if anything, with so many festivities and the monsoon quarter behind, the numbers should ideally be at least, if not matching up to this quarter two, which may have been exceptional, but will still be strong and will comfortably allow you to beat the 20,000 crore mark. I heard you say that you will hopefully reach there. Why such a cautious statement?
I mean, it's always good to be cautious and then deliver more. Under promise, over deliver.
Sure.
I don't want to be very, sort of overconfident. And we have to make sure that we reach there. But that's what I said. We have to work towards it. It's not easy. It's a lot of hard work that goes in see that you get the new product into the market, a better offering in different locations, and I have to get the eye of the customers also, the acceptability.
Most certainly. Okay, Mr. Razack, a thought from you, because you would have seen many cycles. It almost seems to be an unstoppable march on at the upper end of the K, across line items, across products, across categories. Are you sensing that this time around, for the kind of products that you build and launch, that the trajectory is slightly different from what may have been in the past as the per capita moves up, or the propensity of the Indian customer to have that luxury home also moves up? Is the cycle slightly different?
Yeah, one is the cycle is definitely very different, number one. But you see, even in the past, we have done large developments. We have launched large developments, have been fairly successful. Okay, the speed may not have been the same, but the good part is that's where the confidence comes in, is that we have launched, constructed, delivered. You see, now that is the base. We've got the huge, strong foundation below us where we've already done large developments. We've got the experience, we've got the team, and that has helped us to do bigger ones, given us the confidence. And the customer themselves have that faith that, yes, Prestige will deliver, and that's where they come and commit to us rather than somewhere else. So that's what is helping. Of course, the important part is the economy is doing well, there's employment, there is cheer. That also adds up to it. So it's a combination of several things that is allowing things to go on a sort of a rapid trajectory, I would say.
No, but more importantly, sir, the commentary from the the affordable housing companies is mixed. Yes, it is strong still, but it is starting to sound a bit mixed. It's not quite evident so at the upper end of the curve, which is why I was thinking that is luxury housing slightly different?
I still believe housing in our Indian context is a need. And I still believe mid-income housing is where the sweet spot is. We can't afford to ignore that. While we are doing what we are doing, of course, when there is a demand for larger houses, so be it. So we will also produce those. But if we lose our focus and lose our eye on the mid-income housing, we will be a lost cause. So if you have to get the numbers, we have to make sure the mix is right. We have to have mid-income housing while we are also developing the upper and luxury housing, because again, I would say luxury housing is a niche market. It's a very small market. And how much such luxury houses can be built and can be sold? So if you ask me, the sweetest spot is we have to have a larger base where the mid-income housing will always be evergreen, and that is what will sell. And of course, our mid-income housing looks like luxury. So that's another advantage.
Sure.
So that's where the whole scenario changes.
Okay. A word on what could be up ahead. We have a policy in a few days, about a month from now. If indeed the sound bites are a bit dovish, but I remember, would that aid? Because I remember you telling me earlier that real estate growth doesn't happen because of interest rates, but because of the confidence that the consumer has in the economy. And therefore, if 2024 is a year of lower interest rates, would that be net neutral for real estate sales? And would economy still be center stage?
Yeah, economy, of course, is the stage all the time. And interest rates, if they don't go up and if they do go down a bit, definitely it will help the cause. It will give the customer that much more money in the pocket in terms of EMIs. They save on the EMI, and that helps the cause. Of course, see, jobs are getting created and economy is doing well. That is what is helping the whole cause. People have disposable incomes. And the moment you have a larger disposable income, the first thing that you would like to do is create an asset for your family. And that's how residential sales are picking up. And I've seen people who got the first home would also like to invest in another second home, more as an investment and more for their family, for their children. So that is the thing that is happening now. And I think this trend is there to stay and will continue and grow.
Got it. Mr. Razack, final couple of questions. One is on the talk of the risk to emerging market businesses in general, even Indian businesses, which have a high level of debt, and that is of refinance. Now, just trying to think, get your view from a perspective of a captain of the Indian real estate space, part one, because you're a large player there. Is that something that the real estate sector could be impacted with? Two, is that something that could impact you as well?
See, debt always has to be under control. Now, in our company also, we do have debt. Now, I believe that debt needs to be completely monitored very carefully. And if we do have debt in our company, it's more to handle the capex projects like hospitality, retail malls, and office, which we are building to rent out. And of course, you see, it's a question of what comes first, the chicken or the egg. We have to see that the capital comes in. It will be part equity, part debt. The asset gets created, then the asset starts yielding. Now, the good news is that office is doing well, rentals, leasing is doing well. The retail, there's a surge. People are spending money, so retailers are happy, and then there's a good rental coming from the retail malls, and also hospitality, where there's a lot of spending that is happening. So there is a cheer. Of course, in our environment today, the cheer can suddenly disappear for some reason which is not even attributed to us, for external reasons. That's why I'm always cautious. We don't know what happens the next day. But as long as things are going well, we need to consolidate ourselves and make sure whatever we do, we have that cushion. We have that flexibility. What happens sometimes is people do take debt and then divert funds from one to the other or get too overconfident, and that's where things start going wrong. We have to make sure cash flows are tied up. Fortunately, today we have RERA. And with RERA, 70% of the collections have to be used for the project. That makes the project safe. And if it makes the project safe, it also keeps my customers secure. For me, my biggest challenge, how to keep my customers secure, how to deliver, and how to deliver in time. That's the important part that everybody should look at.
Got it, sir. But is there a risk of refinancing costs being higher for prestige estates?
See, it's refinancing is nothing. There will be a little cost extra. Well, construction finance is definitely a percentage point extra than what you would do for lease rental discounting. Lease rental discounting, I'll get it sub maybe even 8% or 7.5%. But then if you get into construction finance, there's a lot of NBFCs that will give you money, but it'll be a little more expensive. But that's a short period. It's a 3 to 4 year window within which the asset gets created. So there again, we need to bring in that speed so that way the asset, also the cost of holding that asset becomes that much less. So yes, there is always a important part is that the interest rate should not go up for that.
Okay. So largely, sorry, sir, just time to square the circle. You do not believe on the existing debt numbers, there is a major uptick in interest costs that could come in because of the need to refinance the debt. Am I getting it right?
No. Yeah, there's no refinance required. And as far as I'm concerned, the interest rates are fairly under control, though it's a little just above that 10% mark. I would have it sub 10, but then this is because of the requirement of getting the construction finance, which is that a little more expensive. But I don't think there's any need for any refinance as such.
Got it. My final question, Mr. Razack. It's been a very merry ride on quarterly sales, monthly sales for all developed, organized players who are delivering quality. There was a CBRE report about 5 days ago, which spoke about the one risk looming on the horizon, and that is of very high inventory coming up at a point of time, sometime in 2024. Do you sense something like that when you scan the real estate landscape, maybe across the pockets that you are operating in, if not the whole country?
I don't think that type of inventory is coming up, because inventory is again, it's a question of securing land, it's planning, and then getting the approvals. The major thing is nobody can launch a project without having the approval in place and having the RERA number. So there's a cycle time, which takes time. And I don't think that there are too many players in the country, except for the listed players, large players, who are, of course, each one is trying to see that they become better, which is a good thing. Actually, we should complement each other. And with this, the growth also happens. It drives the economy. So I don't believe that there's going to be any excess of inventory. And we definitely have always an eye on that. And as a company today, we are suffering for lack of inventory, because when I'm saying that I'll do a 20,000 crore sale, that means 9,000 more to do it for the next 2 quarters. Now, if I look at my inventory, I hardly have 9,000 crores. I can't sell off entire inventory. So what happens is there's a dependency for me to bring in new inventory, which means new launches, new approvals. So there's actually, the reports will be there, but each one would have done their study properly. But I don't see any such scare.
Great. Well, Mr. Razack, Once again, congratulations on a very strong quarter and a strong first half. Wishing you all the best for a stronger second half. And from all of us here at BQ Prime, to you and your family and your team, a very happy festive season.
Thank you. And I also wish all the viewers a very, very happy Diwali. May this new year bring you cheer, more brightness in your lives, and of course, more happiness. Most important is that. I'm sure the next year will be better than the years that have gone by, and wish you all the best for the year.
Cross all fingers for that. Thanks, Mr. Razack, for talking to us today, and viewers, thanks for tuning in.
I wanted to wish all the viewers of BQ Prime and the channel a very happy festivities and a very happy Diwali. Happy investing.